All right. With regards to the UK taxation, right? We have basically, we had a look at a small, summarized picture of what exactly tax is, and what is it, collected for, who is it collected by, and all those things, right? Let's talk about some specific things too. So something specific to UK tax, basically, right? Now, in the UK, first of all, the body that is responsible for collecting the tax is called HMRC. All right. Her Majesty's Revenues and Customs. All right. They are responsible for collecting all the tax, right? Now, we discussed things regarding basically two types of taxes, direct and indirect tax, right? Direct okay. Now, in the UK, there are certain forms of direct taxes. For example, your basic income tax, okay? Your corporation tax. There's capital gains tax. There is inheritance tax. Okay, these are a few examples of direct taxes that you have in UK. Indirect tax, you have value added tax mainly as a form of indirect tax, right? Now, every system has its own way of working, right? Therefore, in the UK, globally it's the case, but in the UK, it's, the years are different basically. What years am I talking about? Every individual pays tax for the fiscal year. All right. The year for which an individual pays tax is called the fiscal year. Every corporation, that means company, pays tax for accounting year, financial year. Okay. So this is the main difference. Every individual pays tax for fiscal year. Every corporation pays tax for accounting year or financial year. Now, is there any difference? Yes, there is a difference. Fiscal year in the UK starts from 6th April of a particular year, ends at 5th April of another year. Okay. Financial year starts at 1st of April and ends at 31st March of the next year. Now, the question is, the law that we are studying, the syllabus that we are studying, the law that we are studying, what years does it relate to? It relates to 6th April 2021 to 5th April 2022. Similarly, 1st April 2021 and 31st March 2022. This is the period for which we are studying. And this period is covered through Finance Act 2021. Okay. So this period is covered through a law which is called Finance Act 2021. The law, I repeat, the law that covers this period that I'm talking about for which we're studying is Finance Act 2021, and we're studying Finance Act 2021. Okay. Now, like I mentioned over here, In the UK, there are certain direct taxes: income tax, corporation tax, capital gains tax, inheritance tax, right? These two taxes, you see, are classified as capital taxes. Okay. Now let's try to, obviously we will look at it in more detail later on as well, but let's try to understand the basics over here. Okay. Income tax versus capital tax. Okay. Now, income tax is applied on income versus capital tax is applied on capital gains mainly. So capital gains, or you can say transfer of wealth, which is obviously not equal. It's not the same thing, but on these two things: transfer of wealth. Transfer of wealth is where you're gifting something to, let's say, your son or daughter, when basically any item exchanges hands such that there's a change in generation. Okay. So if I'm gifting something to my son or daughter, that's a change in generation, right? So that's a transfer of wealth, basically inheritance, which we call it, right? Now, income obviously is something that you earn on a regular basis, but gain is something that is a one-off. Okay, that's the main difference for now. That's the basic thing you need to understand. Income is something that you regularly earn. For example, I earn my regular income from teaching, so my teaching income is taxed. But then from my teaching income, if I buy a property and then after 2 years I sell that property, so for example, I bought a property for £100,000, then I later sold it for £120,000, the over and above of my cost, which is £20,000 extra, the gain, that will be taxed. Okay, so this is how these two types of taxes work. Obviously, when we will be starting our syllabus with income taxation. Okay, so within income tax, let's try to discuss what types of incomes are taxed. Okay, so under income tax, you can have your employment income, which could be taxed. You can have self-employed trading income. Same thing. You can have property income. You can have pension income. You can have interest income. And you can have, let's say, it's not an exhaustive list, but the most popular ones, dividend income. Okay. Now, first of all, an individual, now the steps that I'm telling you are very important, so please pay attention. Okay. First of all, the individual needs to understand what category of income they're earning. Now, in order to understand the categories of income, okay, we need to understand what categories are there, right? So if you see the types of income, you've got employment, self-employed, which is trading, business income, property income, pension income, interest income, dividend income, for example. Okay. HMRC, Her Majesty's Revenues and Customs, says that you need to categorize these incomes. How? There are three categories: non-saving, non-saving, saving, and dividend. So there are three categories of income. Okay. Non-saving, saving, and dividend. The question is, how do I categorize these incomes? For example, there are total 6 incomes. I am earning all 6 of them, for example. How do I categorize? Let's try to understand. Dividend income is obvious. That goes under the category of dividend income. Okay. Interest income, again, it's obvious. Any source of interest income will fall under savings. Okay. Any source of interest income, it could be through a bank, it could be through an investment in a company, in an unquoted company, in a quoted company, it could be on war loans, it could be anything. Okay. If you're earning interest, that falls under the savings category. If you're earning dividend, that falls under the dividend category. Anything that does not fall in savings or dividend falls where? In the non-savings category. Okay. So the point is, first you identify savings and dividend. Let's say you're earning three categories of income, three incomes, three types of incomes, right? And you want to categorize it. You first identify, do I have any savings income? If yes. Do I have any dividend income? If yes. Now whatever is left will be classified as non-saving. Okay. So this is the first step, like literally the first step that you need to perform in order to identify the category. That's basically the first step, that you categorize your type of incomes. All right. Note this down, then I'll move on, because I have to move on to the second step. So first note this down and then move on to the second step. All right. Now, once you've determined the income, right? Please focus, okay? Once you've determined the income, the next step is to obviously calculate the total for each category. So we'll take an example over here. All right, you have to calculate the total of each category. Let's say employment income is £4,000. Interest income, or let's make this £20,000. This is £10,000. And let's say dividend income is £5,000. Okay. So let's categorize this like this. Okay. Now, like I said, second step, calculate the total of each category. So let's say 20,000, 10,000, and 5,000. Okay. The next step, once you've calculated the total, is to deduct charge on income, which mainly is called the qualifying interest. I'm not going to talk about this right now. It's something that we will discuss later on. But let's say right now it's 0. Okay. The charge on income. Once you've deducted the charge on income, you calculate the net total income. Since the charge on income was 0, that's a deduction, by the way. It's not addition, it's a deduction. Okay. So this would be 10,000 and 5,000. Next step, you deduct an amount which is called personal allowance. Personal allowance. Now, what is this amount? What is this personal allowance? Personal allowance is an amount that the HMRC will not tax. Okay. Personal allowance is an amount which the HMRC will not tax. Remember one thing, something that we discussed at the start of this class. We pay individual, we're talking about individuals over here. Individuals pay tax for fiscal year. That means for your entire income that you've earned during the year, you pay tax on that. At the end of the year, I'm going to talk about the timeline in a bit. Now, what is this personal allowance? Is it something that changes every year? Yes, it does. Okay. Depending on the applicable law, it changes. For example, let me just write it in a more presentable way. To the left, personal allowance. As per law, which was applicable last year, that means Finance Act 20. As per Finance Act 20, it was 12,500. As per Finance Act 2021 that we're studying currently, it's 12,570. Okay, so this is relevant for you guys, 12,570. Point is, you've got three categories. Is there any priority for the deductions or for taxation? Yes, there is. There's a priority. What does it mean by priority? See, you've got three categories. Okay, the priority is from left to right. That means if you have to deduct something, for example, any charge on income, you will first deduct it from non-savings up until the non-savings becomes zero. Then you move on to the savings. Up until the savings becomes zero, then you move on to the dividend. You cannot have a negative income, obviously, right? But regardless of that, when you're categorizing it, non-savings. So for example, let's say your charge on income, just for the sake of an example, let's say your charge on income was 25,000. So first of all, I will deduct from non-savings the 20,000. So this becomes zero. And then obviously there is 5,000 pounds left to be deducted. I would have deducted from this. And I would have made this 5,000 remaining net total income. Okay. So this is one aspect of it. You need to understand that the priority is given to non-savings first for all the deductions, then the savings, and then the dividend. All right. Non-savings first, then savings, then dividend. That's the criteria. So for example, in our current fiscal year, the Finance Act, as per Finance Act 21, which is fiscal year starting from 6th April 2021 to 5th April 2022, our personal allowance is 12,570. Obviously, 12,570 is less than 20,000. So the entire amount can be deducted from non-savings only. I don't need to deduct anything from savings or dividend. Okay. Now, the figure that you get over here is called the taxable income. Okay. The figure that you see over here is called the taxable income. Now for this, if I calculate 20,000 minus 12,570, 7,430. This will be 10,000 and this will be 5,000. Okay. 7,430 is taxable under the non-savings category. 10,000 is taxable under the savings category. And 5,000 is taxable under the dividend category. Do you guys understand this? So this is how you calculate the taxable income. In today's class, I'm not going to teach you how to calculate the tax. Okay, because that's actually for some other day. It's for tomorrow. Okay, because that is the real task. Like once you learn how to calculate the tax, that's the real deal. Okay. Now in the remaining class for today, I'm going to give you more examples to solve on your own based on this criteria, based on what we studied today. and you will give me the answers to that. In tomorrow's class, what we'll do is whatever working we do today, we're going to apply tax on those numbers tomorrow. So tax application as to how to see, this is taxable income. Now, once you get your taxable income, there are no further deductions. It's just the tax that you have to apply now. So you'll simply apply the tax now. But I haven't taught you that. Okay. Now, okay, I'll give you some, first copy this down, and then I'll give you some examples to do. Okay. You need to categorize those questions. You need to categorize those incomes. So question number 1. You can do this on Excel, by the way, as well. Your choice. All right, try these 4 questions, guys. You have to calculate, the requirement is for all 4 of them. Calculate taxable income. Okay. For all 4 of them, calculate taxable income. Start trying these.
The change in
Now, in the first case, question number 1, you've got property income 25,000. So non-savings, savings, and dividend. So you've got 25,000 non-savings. You've got 4,500 savings and 10,000 dividend. So that's your total income. 25,000. There is no charge on income. And obviously, you deduct your personal allowance, 12,570. Nothing to be deducted from this because you have enough non-savings income to deduct your personal allowance, right? So this ends up being 4,500 and 10,000. So that should be your answer for the first one. That's your taxable income. Okay. This is question number 1. So answer 1. Now for the second one, if you look at it, the non-savings is slightly less than the personal allowance. Savings. So non-savings you see is 10,000, then 45,000, and then 20,000. So 10,000, 45,000, and then 20,000. So that's your total income. Personal allowance. And obviously, what am I left with over here? Because this becomes 0. So this becomes 0. Out of the total personal allowance of 12,570, I'm left with obviously 2,570. And nothing goes over here, right? So 45,000 minus 2,570 will give me 42,430, right? So 45,000, let's just confirm. 42,430. And this is 20,000. So this is your answer for question number 2. Okay. Again, the point to understand over here is the utilization of personal allowance. Then you've got question number 3. For question number 3, the total non-savings income that you have is basically 4,500 plus 8,500 plus 1,000, right? So that's 14,000. So this is 14,000. So again, entire personal allowance will be allocated to this. So the non-savings category taxable income that you'll have will be 1,430. And you've got dividend income, all of it taxable. So I'm just doing it directly so that you guys can confirm your answers. Dividend income, all of it taxable, is 50,000. And there is no savings income over here, right? Then you've got non-savings and savings. There is no dividend in the last question. Non-savings, you've got 15,000, which is your trading income. And total interest, you've got 25,000. So again, 12,570, which is personal allowance, will be deducted from this. And you'll be left with 2,430, right? And this is 25,000. So this is your answer for the last question, which is your. Okay. I hope this makes sense. So for the first one, you've got your answer 12,430, 4,500 and 10,000 taxable income. Question number 2, no taxable income for non-savings, 42,430 for savings and 20,000 for dividend. For question number 3, you've got 1,430 for non-savings and 50,000 for dividend. And for the last question, you've got 2,430 for non-savings and 25,000 for dividend. Do you guys understand this or not?
Yes.
All right, perfect. Perfect.